Hello, everybody. How you doing? I'm coming down from a cold. I do not have COVID. I spent $250 on a PCR test on Sunday to confirm I did not have COVID. I just felt like shit. So I was out $250 and still felt like shit. And my kids are sick, but everyone's getting kind of better now. So that's why I sound all stuffed up. Very excited to be on the tube this morning for 14 of you on last minute notice. What I have been waiting for has happened. An article came out in the Korean press that I believe is very specific that says that Magnachip is for sale again, which always made sense that they were going to do another sales process. I just wanted to make sure that it was confirmed, and it seems very confirmed to me. I have a link that I posted in the description of this YouTube. I will tweet it here for you. And let's read it. So first of all, this seems to be a financially focused Korean website, and all of their articles are based on finance, stock market, capital markets, things like that. So I'll read it and we'll discuss. Magnachip Semiconductor prepares to restart sale process. Potential buyers include South Korean industry players and private equity firms. Magnachip is exploring a new sale process with South Korean industry players and private equity firms in the pool of potential buyers. JP Morgan, which is advising the chip maker on the sale, has reached out to prospective buyers to gauge interest, according to industry sources, plural sources. The investment bank is expected to send out a teaser to the pool of potential buyers once the company's 2021 financial results become available. That's the middle of February. The move comes after Magnachip's first attempt to sell to Wise Road failed. Potential buyers who previously expressed interest have started to look into the company again. In the pool of potential buyers are South Korean industry players, Samsung, SK Hynix, and LX Group, as well as large private equity firms. Magnachip, There was one other interesting thing here, but it's not here now. Oh, here it is. Sorry. Magnachip, which consists of display and power businesses, is said to not have ruled out selling the company in parts. The company's estimated worth more than 1 trillion won as a whole. That's just what the company's currently trading at. So, hold on. So, what does this mean? First of all, these things could be fake, right? Any article that comes from a non-Wall Street Journal, Bloomberg source should be looked at as highly skeptical. It's a Korean tabloid that I've never heard of. I don't know anything about it. I'm not saying it's not reputable. I don't know anything about it. Okay. So you should always approach these things with a skeptical eye. Now, the reason why I'm so bullish about this is that everything about that article jives with what we expect to happen, right? I've been saying over and over again, the only way they could really sell themselves would be to a Korean financial player and potentially a strategic player in Korea, though even that might have difficulty because Samsung, for instance, would have huge market share in certain areas if they bought Magnachip. It also jives completely with the capital return plan that they outlined last week, which was really no capital return plan, right? It was the 75 million buyback, no dividends, no talk about future buybacks, some very vague stuff about M&A and organic growth, and hammering home this 2023 guidance that is, very, very blue sky, right? Why would you talk so great about 2023 unless you're going to be trying to put on a show and a beauty pageant, and you want to make yourself look pretty for the ball? And it always made sense that they were going to try to sell themselves again. This is a company that had a failed sales process because the winner got blocked by government. So the company was definitely for sale, and nothing has changed to make them not for sale. The only question was, how aggressive were they going to be in trying to get a sale? I think it's clear from this article that, and by the way, I think this was leaked on purpose. These things don't happen by accident. I'll let you know that 3 or 4 weeks before Magnachip was sold, a different Korean newspaper reported that they were selling themselves in the sales process. So the reason why you leak something like this is for 2 reasons. One, or 3 reasons. One, you want to stop people from sending letters like I sent to the board saying, and I sent the letter to the board. People that don't follow me wouldn't know this, but I posted the letter on Twitter. It was a long letter basically bashing them for what I thought was a failed communication process on that conference call last week, and demanding them to clarify certain things. For instance, they put in a poison pill, and the purpose of the poison pill was to evaluate options. And then you do this conference call and you don't even mention or reiterate this to shareholders. So I asked them to, in the future, say that the $75 million buyback was just the beginning of a process and that they were still looking at all options to maximize shareholder value. So you put out a leak like this to show shareholders that you are very much actively looking to rectify the wrong of the Wise Road deal. The second reason why you put a leak like this is it's much easier to get a premium from your stock price at a higher price, a smaller premium, from a higher price than a larger premium from a lower price. So you don't want the stock to be $16, $17 if you're trying to sell yourself for $35. You'd rather it be obviously in the low 20s or mid 20s. And then the third reason you do this is to signal to all potential buyers that you are indeed for sale. And it's kind of like hanging a for sale sign out without doing an official process. Now, I got a great question on Twitter. Somebody said to me, well, Matt, they're doing one-on-ones tomorrow at Needham and on Friday. Wouldn't you cancel the one-on-ones if you were planning on selling yourself? Now, the best part about this Magnachip process is you can look back at everything they did in 2020 and 2021 ahead of their sale to Wise Road. I talked about this a lot in the last YouTube. And I've already talked a lot about how they never mentioned they were in a process, and that they did the exact opposite. In fact, making it seem like nothing was happening. For instance, they were supposed to do a capital return plan in Q4 of 2020. They pushed it to April of 2021. And as recently as February of 2021 was trumpeting that April shareholder day, investor day, when they sold themselves 4 weeks later. But there's more. If you look at the press releases in March of 2021, Magnachip did multiple conferences as recently as 11 days before they signed the definitive deal with Wise Road, doing one-on-ones. That's right. 11 days before the sale, they were doing one-on-ones with investors. So, of course, they wouldn't cancel the Needham one-on-one tomorrow and the day after when they're months away from a sale now. And I expect them to operate just like they did last time. Like everything is normal and you'll have no clue of a sale unless we get another leak in an article in the future, or we just wake up to a sale. They're definitely not going to want to talk about it because they were very embarrassed what happened with the last sale. And there's no guarantee they're going to be able to sell themselves. It's a much smaller pool of buyers, and they have to get the right price. So what is the right price here? And I discussed this in the past, but I think it's important that we all understand where this could go. And I think it can go for significantly more than $30 a share this time. So if you take the previous purchase price of $29 and you add the $1.50 in breakup fee, and then you roll forward numbers a year and a quarter, and you roll forward your DCF, or you just look at what SMH has done in that time period, you get to mid 30s. Easy. And that includes the 4% accretion you'll get from buying back the stock at these levels. Because you have to purchase less stock at 35 than you would, of course, without the buyback. It can also be argued that the company is in a stronger position today than they were when they did the last sale process. Now, that seems kind of twisted, right? Because the numbers weren't great in the last 3 quarters as a result of the supply constraints. But with the visibility that they have into 2023, when this deal closes, it won't close until the beginning of 2023, the end of 2022. And revenue is going to surge in the years to come. So with the leverage you could put on the business and knowing that cash flow and revenue is going to surge, I mean, it's a very different proposition than it was when they were with the pool of buyers in the past. Not to mention, everything about the capital markets is different today than it was back then. Like I said, SMH is 25% higher than it was when they did the last sales process. How does this play out? I mean, most likely we hear nothing for at least 3 months. But these things can come together much faster now that they've already done a sales process in the past. So I would think you could probably have a deal as quickly as 8 weeks after they report earnings in mid-February, if not sooner, given the fact that there's nothing stopping them from actively engaging with people now. They just don't have the fourth quarter numbers. So in my best case scenario, it's sold by the end of April. In my base case scenario, it's sold by the end of June. And I would say in my most cautious scenario, it's sold by the end of July or August. I would put an 80% chance on the company being sold or broken up. There is no turning back after the failed sales process. Now, plenty of companies, you'll say, Matt, plenty of companies have gone through a sales process, had it blocked by governments, and then never sold themselves after that. Now, in most cases, those were much larger companies like an NXP, and there were not natural buyers after a China blocked a strategic from buying them. They couldn't restart that sales process. To me, your risk here is that South Korean capital is not deep enough to consume this company. Now, someone asked me, Matt, they weren't involved in the first process. How come South Korean capital did not bid in the first place? You know, I don't have a good answer for that, except that auction was very competitive. And it was almost all Chinese money. And I don't think the void of South Korean capital being in that auction means that there does not exist money in South Korea that can consume this deal. In fact, the article even says that was the main focus of their reach out, was South Korean financial players. I also would not minimize the politics behind all of this. What went down with China and with Magnachip on South Korea and by South Korea and the US government was nasty. And most of the shareholders here are American shareholders. Of course the company and the board is all based in South Korea. From all constituencies, everybody makes out better if this is sold domestically to South Korea, to a South Korean entity. So I'm incredibly happy about this article. To me, it speaks volumes and it explains everything about that conference call, about the poison pill. And I would think your biggest risk is that the highest bid is not $29 a share, and they feel like they can't take anything less than that. But remember, this is very important. $29 a share today is almost like $23 a share back when Magnachip was doing their last sales process. It's very different. You have the breakup fee, you'll have a smaller number of shares outstanding, and you have a year and a half forward in numbers, as well as SMH being 25% higher. So it's a much lower bar for them to get that $30 bogey that they need to get than they got last time. And I think they would probably take any sale above $29 a share. I think they're going to get much more than that, but I think they would take any price. Couldn't the potential buyers use the failed sale as leverage? Fewer bidders around, as well as MX could be seen as desperate in selling themselves. Again, that's the sole risk. The sole risk is in any auction, you need multiple people bidding for the company. It's my belief that you'll have enough buyers, you just need two, that see the value in the company, and then you get to the $29 a share. If you only have one, the leverage they have has to be offset by the fact that Magnachip can just say no. Magnachip isn't in a weak position. They don't have to sell themselves. But clearly, it's in everyone's best interest that they do sell themselves, from management to all the shareholders. So is it as good as a global auction like we had last time? It is definitely not. I am not here to tell you that this is a better situation than that from a number of potential buyers. But I try to think of an analogy, and there's no perfect analogy to this. But if I'm selling, a local pizza shop down the street, and somehow I get a global investment bank to solicit bidders worldwide for that pizza shop, and the deal falls through, and somehow only San Diego buyers can buy the pizza shop, do we really think the pizza shop's going to go for a very different amount of money? At the end of the day, it comes down to an Excel spreadsheet and your cost of capital. And China probably does have the cheapest cost of capital, which is true. So I'm not saying that the rest of the world can be as aggressive as China was in that auction. But what I fall back on is that the financial model works for Magnachip here. And it wasn't just Chinese money. There were people outside of China that were bidding. The company just said no one in South Korea bid. The original article that came out 3 weeks before they got sold said it was mainly US and Chinese financial buyers. Okay, US buyers are just as disciplined as South Korean buyers. And the prices ranged anywhere from 25 and up. And as I pointed out in a previous YouTube, there were 3 other buyers that weren't done with their due diligence when they signed with Wise Road. At least one of those was Chinese, but they were just getting started, and they knew what the auction was going at. So, if anything, the deal was kind of rushed. Also, can we trust South Korean rumors after that LOL Beeb story? It's absolutely true. You have to take any article with complete grain of salt, especially some local newspaper in South Korea, okay? I am not saying that this is God's word and that this article should be taken as fact. All I'm saying is if they were going to fabricate a story, this would be the most perfect story to fabricate. Everything about it checks the box to me about true. And the specificity of it. They said who they hired, okay? They said that they would consider breaking up the company. To me, that's very different than that ridiculous Beeb story, which, by the way, had 4 sources on it, not from the same newspaper. I would like to tell you an interesting story again about how you can't trust anything Magnachip says. So after that newspaper article came out, I was on a call with a friend that was doing an investor relations call with Magnachip. And the IR person who is currently still working for them was asked about that article. Now, of course, she's not going to say the article's true, but she almost went out of her way to say the opposite. She said that she cautions you to believe rumors in the South Korean press, and that when she went to join Magnachip, she read all sorts of things in the press about Magnachip that were false. I was on the call. The company was sold 3 weeks later. So she went out of her way to say, don't believe everything you read. And then it was sold 3 weeks later. Okay. She could have just said, I can't comment on rumor or speculation. Instead, she went out of her way to kind of poo-poo it. And this is what we've gotten from Magnachip Investor Relations for the last year during the sales process. They have been nothing but a wall. They will give you nothing, which in some ways is good. You don't want selective disclosure. So what would I like to see here? Of course, I would like to see another article reiterating this article. So then you could have a second source. But listen, it all makes too much sense. The company told us that they were going to evaluate options going forward, and they put a poison pill in place for it. What options do you think they're evaluating? Whether to change their name to Mega? You know, we know they're for sale. They were for sale. They fucked up. They did not get the blessing of the Korean government when they sold to China. They should have beforehand. They learned their lesson, and they will not take another sale that doesn't get the blessing of the Korean government. It's unlikely that will be U.S. capital. Maybe U.S. capital could be a minority investor. And, you know, that's where we are here. The odds they do a strategic sale are low, but I can't imagine China or the U.S. blocking a Korea to Korea strategic sale either. And yeah, I'm very happy with this. Very happy with this. Last week's call and company actions makes much more sense with this scenario. I agree, Glenn. And, you know, that's what I've been speculating. Just my thoughts on this, but if a South Korean company is going to bid on this now, they would have bid on it. That's in the last round. So, David, that is also true, but I can't overestimate the politics in this. So back when Wise Road deal was going on, a friend of mine speculated that the Korean government would strong arm South Korean strategic to overbid to save the face of having to block a Chinese deal. So you could argue that when I only have a few minutes actually, because I have to do a call with Eva, and Eva's at the pediatrician with Sam. So when she calls, I have to hang up, but I'll stay on until she calls. I was train of thought. Oh, you have no idea what's going on behind closed doors. Yes, the odds of a strategic purchase are low. I think it's much more likely that it's financial. Can Sam or China not bought the deal despite that would imply no sale at all? No, Praven. It would be completely unheard of and unprecedented for a financial firm in South Korea being blocked by SAMR when they can't block that. And remember, the U.S. blocked the deal, not South Korea. So if SAMR blocked this, you would never get another deal approved ever again from South Korea and China. I'm not concerned about that at all. Why can't a U.S. firm buy it? China could block it. And South Korea, the local South Korean community was upset at Magnachip selling to a foreign buyer. So there's a chance South Korea won't even bless a U.S. capital firm buying it because they'd be worried about jobs. Now, of course, a U.S. capital firm would not be taking the business out of South Korea. So there's a chance that would be okay. There's also a chance that China would be angry at a U.S. capital firm buying it. You have to remember, this is a small company. This is not some $20 billion company. It's hilarious that it trades at the valuation it does. And then we're even having this conversation. This should be at like 30 times earnings. based on the strategic importance, apparently, worldwide to Magnachip's business. And as Glenn says, if there's no sale, we'll wake up one day to, my guess is, a tender offer and some form of recap. Quite frankly, it's nuts the stock's still below $20. Okay. It's very short-sighted. The street took down Q1 and Q2 numbers. The tax rate went up, so that affected EPS. It's totally irrelevant to the long-term health of the business. The key takeaway of that call was that there's no customer issues, that they have demand for greater than 50% more than they can supply, that business is going to boom once the supply rectifies itself. I mean, the stock went down since my last YouTube, but my underlying thoughts beyond what that call said didn't change. I was disappointed in the capital return plan. We now know, or we think we know, why they kept with that capital return plan. And you're going to be entering the second half of this year with a business that's going to be booming. And it's trading at, $11 ex cash, and it could do as much as, $1.75 in earnings next year. Something like that, right? Put a 20 multiple on that, it's a $35 stock, and you add the cash, it's a $42 stock. And none of that's aggressive at all, right? So, yeah. A lot of moving parts. It just takes one buyer that wants to buy them, right? It's not about who has leverage. It's one buyer that wants to complete a deal. I'll point you to Casper Mattresses. I was looking at that yesterday. I do not own it, but they sold themselves for $6.90 a share at 100% premium. And if you pull up the proxy, there were no other bidders. The other bidders were basically doing distressed recaps. So one private equity firm, is willing to pay $6.90 a share, 100% premium, and there was no one else that was interested in purchasing it. So where was your competitive auction there? Right? It just takes one buyer. And the circumstances now are very different than the circumstances back when they did the previous process. And the stock's 19, which is $17.50 adjusted for the breakup fee. And if you go back a year, if you take 10% off of that for the time value of capital, time value of money, it's 10 or 15% less than the $17.50. So it's like 16. So you're paying $16 today versus when it was 19 a year ago into the process. The whole thing's crazy. It's crazy. So, yeah, I basically have my whole portfolio in the stock, which is not smart, and you shouldn't do that. And I do not recommend that. None of this is investment advice. Oh, man. This year's already shaping up to be something else, man. On a side note, my second biggest position is Blackstone Minerals, BSM. And there was a deal today by a competitor, which is FLMN. They are merging with a much larger private royalty company. And together it's like a 1.9 billion enterprise value, though the stock's down 10% right now. So it's probably more like 1.75 billion enterprise value. If you look at the amount of energy they produce a day, it's 14 million barrels equivalent. And Blackstone produces 34 million barrels equivalent. And the enterprise value to production, the discrepancy is huge. And Blackstone's going to be growing next year rapidly over the next 2 years, while this is basically flattish production. So One's a C corp and one is not, but that doesn't matter to me. But I love that deal to highlight how cheap Blackstone Mineral is. The amount of funds that investors commit to invest with private equity funds and they're actually invested respectively were 97 trillion KRW in 2020. Oh, did it go up to that from 97 to from 70? You're missing something there. That's interesting. Was that in the article? Yeah, that's not in the article. By the way, 97 trillion won is basically like $80 billion. So that means South Korea has 80 billion put into private equity firms last year alone, when this would be like a 1.5 billion check, because there'd be some leverage to it at most. Any updates at AMPY? I still own it. It's still a decent sized position. It's a complete black box. We're waiting to find out whether they sell themselves, what the path forward is at Beta. Yeah. Have I looked into AXSM? Yeah, I've talked about that in previous YouTubes, David. I actually own call spreads in AXSM. I sold all my AXSM call spreads on the day they reported earnings in the first week of November because I was very worried about the timing of approval. I still think AXSM is approved. I'm much more nervous about where it goes on approval, given this terrible biotech tape we're in. So I haven't re-entered. I think if I was going to re-enter AXSM, I would own March call spreads. I think it's much more likely you get a resolution there in the next 4 to 6 weeks. It shouldn't be 6 months. I don't feel any real need to re-enter there, but if you were going to have a CRL there, I think strongly you would have been CRL'd. And again, my only concern is how much it goes up. I know a bull in AXSM, and they think it goes to like 100 or 90 based on the label. So maybe it does, but I'm not comfortable putting on call spreads right now, given what the biotech market has done. Michael Schwartz, hi Matt, can you please add me to your feed? I can't add anybody to my feed anymore unless you do the following. You have to block me, unblock me, and then re-request to follow me. And then maybe it'll work. So if you tell me what your Twitter handle is, I can look for it in the top. Twitter changed the way that they handle requests. And because I have a locked account, I've had it for so many years, I have thousands of pending followers, and I can't search the pending followers anymore. So there's no way for me to find you. Oh, I thought I added you, Michael. You're the CB. Are you were you on the floor of the options at Amex? Or is that a different Michael? Is that you? I did. I think I did, Michael. Is that you? It's so good to hear from you, man. You were a great mentor when I was down there. I really mean that. I learned so much. For those of you guys that don't know, I was in a training program for a year at Spear Leads and Kellogg, which was an old market making and trading firm that really doesn't exist anymore. But they basically were the largest. They were the largest New York Stock Exchange specialist. They were the largest NASDAQ market maker. They had a huge presence on the Amex floor in both options and ETFs and even Amex equities. They had an ARB desk. And for a year, I spent 8 weeks in each of those rotations with the hope of getting a job at the end of the year. And it was the middle of the financial crisis, and no jobs were handed out at the end of the year, except on the floor of the New York Stock Exchange. And I hated that. And for good reason. That was prehistoric. And every one of those people that took a job on the floor of the New York Stock Exchange just ended up getting laid off in the next 5 years anyway. Michael was a full-time market maker there. Probably was Michael, he probably like 4 or 5 years older than me at most, I would guess. And I learned a great deal from him. So that was one of my favorite rotations. Almost everything I know about options started in that rotation. My favorite story about being down there was a more senior guy that Michael worked with, Bob or Bill. You're not 63. That's not possible unless you're telling me that that's your maybe you're not the Michael I was referring to. I think you're the Michael I'm referring to. There's no way you're 63. But there was a guy down there who was pretty senior, and I was working the options market making book. And basically how that works is we get order flow that comes in, and we can decide to you must be a different person I'm referring to then, but his name was Mike, and we worked together on the floor of the options floor. So I can't imagine you're that much older than me, but that blows my mind if that's true. So anyway, this order came in, or maybe it was just an open book on the in one of the stocks that we were making a market in. And let's say the stock was trading at like $20, and there was a bid to like buy 1250 puts that expire that week or the week after, and they were bid at a nickel. And I thought that was free money, right? The stock's $20. There was a 1250 bid for nickel puts. And I said, can we hit this bid? And my boss at the time for those 4 weeks said, you can, and he's like, that'll work. That might work 99 out of 100 times. He goes, the 100th time it doesn't work, you'll be fired. I'm paraphrasing, but it's basically the old adage, picking up nickels in front of a steamroller. And until you've been around for decades, you don't experience what that's like. It's easy for a 22-year-old to say, why would you not just collect that nickel? Because there's no way it's going to $12.50 in the next 2 weeks. It's $20 right now. So anyway, Michael, I'm pretty sure you're the same Michael. I don't believe you're 63 years old. I will definitely add you to the account after I get off with you here. Let me write this down, voice 12. And Fat Eddie, do the same thing, Fat Eddie. You should block me, unblock me, and then re-request me, and I'll try to find you there. How did those puts close? Oh, the nickel you would have made the nickel. They expire worthless. Yeah, nothing happened. On this, I think he actually let me sell them. I think he said I could sell them. It wasn't going to ruin the firm or anything. It was like 100 lot or something. I don't even remember. On this MX news, I'll probably buy a couple shares to see this pans out. I have horrible luck with these kind of plays, so fair warning. Okay. Thanks, Andrew, for your support. None of this is investment advice. This is a South Korean semiconductor that had a broken failed process to a Chinese buyer. What could go wrong? I'm still waiting for Eva to call me. So we can keep going. Any other questions? The Casper, the CSPR thing, let's talk about that really quickly. It's pretty interesting. I'm not involved, and I definitely don't advocate anything. But basically, Casper is in this cash deal at $6.90, and the shareholder vote on it is next week or 10 days from now. And it should close shortly after that, within a week or two, if not within days. There's no regulatory. There's nothing like that. And the deal was signed November 15th. And the same day the deal was signed, they reported Q3 earnings. And they have not reported any numbers since then. The only thing that's happened since then is they put the proxy out in the middle of December, and their proxy detailed that the company's a shit show, that were no other buyers for the company, and that they're basically insolvent. And ARK and other high growth tech stocks have plummeted since mid-November. ARK is down like 25 or 30% since mid-November. So a paid subscription website, just a guy in a computer like me, put out a short report on this, saying that the private equity firm that's buying them is a chop shop and that they should walk. And if they don't walk, they should recut. And it's at first I really panned the report and I actually went long it, but I sold all of it that I owned. So I'm not involved anymore because my sleep is more important. So Jeremy Rapper, who I actually talked to on a Twitter Spaces about AMPY. I was involved in it in a kind of a three-way. So that's the only way I've ever known him was through that Twitter Spaces. And it was a nice conversation. So the pushback I give on this is that the private equity firm is real. They've done one deal in the past, and they've done two investments. It's a domestic private equity firm. It's not some like Chinese capital. And there's no financing contingent here. Contingent here. They have the financing lined up. Jeremy seems to think that the LPs of this hedge fund, of this private equity firm, will just not step up or could not step up and fund this when the time comes a week or 2 weeks from now. And my response to that is that's not how this works, right? They have a binding deal. There's been no new numbers that have come out since Q3. There's no reason to think that this firm doesn't want to own this. They saw all the numbers going into this deal, and Casper will sue them to close the deal if they try to renege. In the past, in the financial crisis, private equity firms were dropping deals left and right. So just because you have a binding deal doesn't mean it's going to close. But in this situation, I have no idea how they get out of this. It's only been 2 months. This wasn't 2 years ago or 6 months ago when they signed. It was 2 months ago. And it has to close in a few weeks. And would I want to buy this at $6.90? I wouldn't want to pay $1 for this. So I ended up selling because I don't think it's worth the headache. Knowing that LPs that put the money up for this, which are contractually obligated, they have a letter of commitment, and Casper can sue, I think, through to the LP level if they don't put the money up, that you're going to lose, the day you close on this, you'll lose 50% of your money at most, and probably more. It was trading $350 before this, and the market's collapsed since mid-November in shit stocks. And I'm sure Casper's doing, only worse. So I originally really panned it, but on reflection, it's not the worst. It wasn't the worst short idea at 665 when he wrote it up. So I'm intrigued by it, not intrigued enough to own it. I can't wait to see what happens. I still think it's a greater than 85% chance that they close on this. I'm guessing Jeremy would tell you the same thing, but his, setup at 665 is different than 6 or 640 on the short side. What else can I talk about while I wait for a phone call, while I have all you nice people here? This market is very interesting to me. Both the biotechs and ARK go down every day. It's hard to see how you get a sustained rebound in the overall markets until you see these things stop going down. But obviously, it's very healthy to see meme stocks, high growth stocks, crypto reset. It's also hard to imagine the market going materially higher without those elements resetting. So to me, it's only setting up for a strong equity market this year. Where are you going to put your money? You're not going to put it in US dollar. You're not going to put it in bonds. So as my friend Sheep said, it's really real estate, real assets, Stocks, stocks should hold pricing power. That's the other thing, by the way. And I'm not bullshitting. A $29 Magnet chip a year ago is not worth $29 today either, right? We have inflation of mid to high single digits. So just on inflation alone, you'd pay $31 or $32 plus the breakup fee for Magnet chip today. Tell me where I'm wrong. I don't think there's anything else I want to talk about. We're still on Pershing Square Watch. I don't have a position in that anymore. I think that there's worse places to park your money at 1980. You have, complete upside if Ackman pulls a rabbit out of his hat, either through Spark or through a deal. There's definitely a non-zero chance that he does one or the other. His reputation's kind of out there on this, and I think he wants to redeem it. I saw today that the deal was recut, David, but I don't know it at all. I don't really have any capacity for new ideas right now, since a Magnet chip is so big that I told you that's one of my New Year's resolutions is to eventually. I've already cut Groupon a lot. Groupon's now under a 20% delta adjusted position, and it's all options. So the only positions I have of size are Blackstone Mineral, and then Magnet chip is by far the biggest one. Vast majority of my portfolio, which is not recommended by any means. Nothing's recommended, but that's really not recommended. It's probably going to be until Magnet chip either gets to the mid 20s before I, could take maybe, even 23 before I could take some capital off there. Until then, I won't be putting on new ideas unless it's really short-term in duration, kind of R-based, and it's marginable. Another position I put on, I can't remember if I talked about this or not. I put on a position in AMBAC, AMBC, which is it's up big today. So I'm not trying to pump it because it's up big today, but they have a long-running lawsuit. I swear I talked about this on here. They have a long-running lawsuit that should finally be resolved this year, going back 10 years with Bank of America. And you could read the old write-up on Value Investors Club there. It's not behind a paywall. And I think that trades really well into a settlement or the lawsuit, the trial that's in September. I'm kind of looking for low 20s there, even before you get a settlement or or winning on the lawsuit. And it's a boring bank or a mortgage backed insurer, not a bank, sorry. So it doesn't correlate with the rest of my portfolio. And I have on a 8% position there, 9% position there. I put that on in December, about $1 below where it's trading at right now. There was a huge block that trade today, and that is why I bring it up, not because it's up today. I didn't talk about this. I put on a biotech basket in another. I manage some money for my family, my parents, basically. And I manage similar stocks, but they have more capacity and I don't use as much leverage or anything. So I was able to buy some biotechs in that. And that has not worked out so great. But there's a biotech basket I put on there. In that basket, I have CALV, KALV, MYOV, BBIO, QURE, and OCUL. And I don't know anything about any of those. So do your own due diligence. But I found all 5 of those to be interesting for different reasons. The common denominator between all 5 of those is they're very well capitalized. There's no need for capital raise this year. And they also all don't have any short-term catalysts. Just really beat up biotechs. I thought I was going to take to get a bid in bios. David, I don't know what people are worried about, right? Clearly, Congress isn't going to pass anything that's going to affect reimbursement. And we're going to a midterm where there's about to be a split Congress in the White House. So I don't think it's a regulatory situation why they're trading so poorly. I've long thought that the whole business model was completely broken. The insurance business model, the reimbursement business model, the fact that there's no risk cost benefit in the pricing of biotechs, biologics. You saw what happened with Beeb today, and that was great. It was great that Medicare rejected the drug, because just because a drug has a risk benefit doesn't mean it's worth X dollars to society. And Sarepta is the poster child for this, right? For those of you that don't know, I used to own Sarepta. I was the poster child Sarepta guy, and I still am very passionate about any drugs that they can produce. But the controversy with Sarepta, beyond whether or not they've proven that it's eteplirsen or whether they've proven the gene therapy drugs is a positive risk benefit, which I think you can say definitively it is. All that means that the benefit outweighs the risk outside of cost. And since the safety profile on eteplirsen is so clean, and it generates some dystrophin, you have to say that any benefit is better than no benefit. The question is it worth $1 million or $2 million per child per year to the healthcare system? And this question is being asked across every drug that gets approved and is on the market. And currently, there's no rhyme or reason how you price any of these drugs. You just comp it to another drug that's on the market. Basically, you charge the maximum the system lets you charge. And insurance in the past hasn't given a shit, because they'll just hike the rates of their customers to get the required return on equity that they're allowed to legally. At the end of the day, the system breaks because there's too much cost and the premiums go up too high. And I'm guessing that's part of the reason why biotech has been so poor the last year. It's not a result of innovation being stifled. There's plenty of innovation out there. You have to own stocks that really are putting out drugs that really make a difference, and the cost of the drug is substantiated by the effect of the drug, either in the cost that it reduces in the maintenance stage if you didn't take the drug. So, for instance, look at hemophilia. If the transfusion that a cure drug gives you, you can prove the NPV of that saves money to the system versus having to do transfusions and for a life of that patient, then everybody wins there. But if you charge, much more than that NPV, it's hard to argue why it's worth that, right? There's definitely some value to the patient getting a much better quality of life, of course, but it's just an example of where I think you want to go. There's way too many drugs that are approvable, but don't necessarily work well enough to matter. I think, again, I'll give you another example. So all the controversial ones are kind of like this. So CCXI was something that I owned that was major amendment and it got approved. Again, it's a rare orphan indication. The controversy there was it didn't really do much more than standard of care. And all CCXI said was doctors should have this in their toolbox to offer it instead of offering standard of care. Well, that's great. But now, they're trumpeting, $500 million to $1 billion in sales for something that I think a skeptic would say is not that different or that great versus standard of care. They have a phase 3 readout that'll hopefully tell us more, but it's a perfect example. Anything that's controversial, that's the best way to say it. Anything that's controversial going into the FDA system probably means it's going to be priced as something that is not congruent with what its value is to the American healthcare system. And you saw what happened with Beeb, and I think the market's worried that'll happen to other companies. And then all you're left with is you have this pipeline with some drugs that are provable because they hit a p-value and they have a solid risk benefit, but they're not clinically meaningful enough to justify that price point. All right, I'm totally going on and on, but I think you get it. Any other questions? Oh, Dan Hurley, quick question. What % of your shares do you plan on gifting to the person who sent that article? Thanks. It is true, Dan Hurley, USA. I always like to think that you're UA. What does your UA stand for? Is that Under Armour? Is it your favorite brand of athletic gear? United States of America? And I asked you what the UA stands for, Dan? D. Hurley, UA. United Asshole? I don't know. He wants to know whether or not I'm going to give him any money for DMing me that there was Magnachip article this morning. The answer is no. I'm not going to do that. I think that's it. IMVT will be interesting this year. I have no comment anymore on that. I just have January 23 call spreads, and I don't advocate putting a position on that at all. But if we're going to see Rovient, consolidate that, this would be the year to do it before they, get any further along in the clinic. And I still think that they want to consolidate it. The risk there is they only pay like $11 or $12 a share, not 15. Any news on BMYRT? Oh, David, you're going to ruin my day. There's no news on BMYRT. We're going to be waiting a while for news on BMYRT. I'm very, very sad about BMYRT. With Bristol Myers spending $50 billion on buybacks and M&A over the next few years. And they robbed us. Oh, how life would be different right now if BMYRT went through. I guess this doctor's appointment is taking forever. It was supposed to be at 30 minutes ago. All right. Well, I love talking to you guys. I think I covered everything. I will speak to you next time there's news in something. If it makes you happy, at least Dell keeps hitting new highs. I'm all out of Dell. I don't own Dell anymore. I do own VMW combos. And I still like VMW a lot. Not really necessarily owning the common, but I like owning call spreads and selling puts against it. And I've talked about that in previous YouTubes. Peace. Michael, I will try to find you on my Twitter account. Take care, everybody. Bye.